Welcome to the Transparent FX Academy. I'm Nick and I'm a top podder on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In today's video, I will be speaking about Euro USD because at the moment we do have quite interesting price action and structure. Now, as usual, in order to keep the analysis as educational as possible, first I will be covering the technical side, then we will move to the order flow, so the commitment of traders, which is the COT data, so what the non-commercials and the biggest speculators in the market are doing, so essentially institutions. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move on this pair. Now, starting here on the monthly time frame, what we can see is that we just had a massive impulse to the downside with just one candle not related to the move. What I mean by that is that the only candle of a different color is this green candle here, which shows that even though the market was moving to the downside with very strong bearish momentum, anyway, it reacted to the zone printing this green candle, showing that this is very strong previous monthly support, which is now turned resistance. So here on the monthly, we're testing exactly that previous monthly support and resistance, and there is definitely the possibility to see some bearish price action develop away from this zone. Dropping down on the weekly time frame, what we can see is that also from a weekly perspective, this area is previous supply. We have two supply zones around this area, which are essentially this one here and this one here. From here, this rejection to the downside was created. From here, this rejection to the downside was created. And as we can see here, the market has already tested both the areas and is currently finding resistance at both of these zones. So here on the weekly time frame as well, we could expect a rejection lower. Now, it's also important to point out, switching back 1 second to the monthly, that this is exactly the zone where the market is currently trading above the 0.786 of the Fibonacci taken on this monthly impulse. Now, why that is important? Because we will have in 7 days the close of this monthly candle, and sellers should try at least to protect this monthly close below the 0.786. So that could be some added selling pressure on the bearish side of the market. Now, moving down on the daily time frame, what do we have? Now, from a daily perspective, this is where things get a bit confused because we still don't know exactly which pattern the market wants to create. The structure is very clear. We know that here we have previous daily resistance turn support. From here, this rejection to the downside was created. Again, here, tested and rejected. Then the market broke above the zone. So this previous daily resistance became support here and again support here. Until the market will remain above this area, it can easily continue higher. However, if it does continue higher from here, that would also create a W formation because we would have move to the downside, correction, move lower, move to the upside. And what we know is that after the creation of a W, we would like to see a rejection lower and completion of the pattern at the neckline. On the other side, if the market here will create a rejection lower, breaking below the support, at that point, this previous support would become resistance here. And what we know is that after the break of previous support, it becomes resistance, and the market is supposed to go and retest that previous support and resistance before then providing a potential rejection to the downside for the completion of the impulse, correction, and impulse pattern to the downside. So if we get a rejection higher, we would expect a rejection to the downside for the completion of the W formation at the neckline. But at the same time, if the market from here creates a move to the downside, we would expect a retest and anyway a move to the downside. So no matter if from here the market goes higher or lower, we would have an interesting shorting opportunity with good probabilities. Now, moving to the commitment of traders and checking the data for the euro, the first thing that we have to keep in mind is that If you're checking data for the euro, you're actually already checking euro USD because all currencies on the spot are traded against the USD. So if you check the data for the euro, you are already checking euro USD. What we can see is that with the last report, we have already seen some institutional profit taking on the euro with 8.6k longs getting closed. Now, these are institutions which are currently closing their longs, so taking profits on their longs that they had after all this move to the upside. So they definitely had quite a lot of a long ride to the upside, and now they're starting to take profits. If we see a W formation or a break below support, at that point we should see also shorts getting added, which we are currently still not seeing. However, we already see that after a lot of months where net positions were only getting increased, this is the first time that net positions are starting to get decreased. So it could be an inversion from an increasing of net positions to a decreasing of net positions, which at that point would be quite bearish for the euro, supporting even more these two potential shorting opportunities. So if the market will create a move to the upside or break below the support, on the retest, how we could be approaching these potential setups. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection lower for the market to complete this impulse correction and impulse pattern to the downside, or for the market to complete this W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from 497 euros all the way down to 97 euros for lifetime access, one payment. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. But this is only if you want, you're not forced to join them. Now, if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer expires and price goes back to normal. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway. So I really suggest that you take advantage directly from here to gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.